Another red day. Another panicked headline about inflation, war, or the Fed. You're staring at your portfolio app, and your heart rate is tied to that line on the screen. When it goes up, you're a genius. When it drops, you feel that pit in your stomach. You're doom-scrolling social media for confirmation bias, just looking for someone, anyone, to tell you it's all going to be okay. Welcome to the modern investor's reality. You have more data, faster tools, and more sophisticated AI at your fingertips than any generation in history. And yet, you are more anxious, more reactive, and more emotionally fragile than ever before. Why? Because you're trying to solve an internal problem with external tools. You think a better chart pattern is going to fix your fear. It won't. The financial industry wants to sell you complexity. I'm here to offer you simplicity. A 2,000-year-old operating system for the mind, designed specifically for thriving in chaos. It's called Stoicism, and I believe it's the only way you survive this game long-term without losing your mind. Let's start with the foundation of Stoic philosophy, the Dichotomy of Control. It's deceptively simple. There are things you can control, and there are things you cannot. Because of nearly all your financial anxiety comes from confusing the two. Let's be brutally honest. What do you actually control in the market? Do you control the Federal Reserve's interest rate? Policy? No. Do you control geopolitical conflicts that spike oil prices? Of course not. Do you control the earnings report of Apple or Tesla? No. Do you control the daily sentiment of millions of panicked traders? Absolutely not. 99% of what moves your portfolio is completely outside your influence. Yet, we spend 99% of our energy obsessing over it. It is madness. It's like standing outside in a thunderstorm and screaming at the clouds to stop raining. You just get wet and frustrated. So, what do you control? You control your emotions. You control your reactions. You control your asset allocation. You control how much leverage you use, if any. You control your savings rate. You control how often you check your phone. The Stoic investor draws a hard line in the sand. If it's outside that line, they ignore it. They have zero emotional attachment to it. They pour all their energy inside the line into their own behavior. When you stop trying to control the uncontrollable, you don't just become a better investor, you become free. This brings us to the second trap, obsessing over outcomes. In finance, we're taught that the outcome, the profit, is the only thing that matters. If you made money, you were right. If you lost money, you were wrong. The Stoics strongly disagree. They believe the process is what truly matters. They call this virtue, or simply, rational action. Think of an archer. The archer controls his training, the quality of his bow, his stance, his aim, and the exact moment he releases the string. Once the arrow leaves the bow, he controls nothing. A sudden gust of wind could blow it off course. The target could move. A Stoic archer judges himself only up to the point of release. If he did everything perfectly, he has succeeded regardless of where the arrow lands. How does this apply to your portfolio? You might do dozens of hours of research, analyze the balance sheet, and buy a fundamentally sound company at what you believe is a fair price. That is a virtuous process. The very next day, a global pandemic is announced and the stock drops 30%. Did you fail? The market says yes. Stoicism says no. Your process was sound. The outcome was bad luck. Conversely, you might buy a meme stock because a cartoon ape on the internet told you to, and you triple your money. The outcome is great, but your process was garbage. You are reinforcing bad habits that will eventually destroy you. Stop judging yourself by the numbers on the screen. Judge yourself by the quality of your decisions. Did you stick to your plan? Did you act rationally instead of emotionally? If the answer is yes, then you have succeeded today, regardless of what the S&P 500 did. Finally, we need to deal with fear. Modern financial gurus love toxic positivity. They tell you stocks always go up in the long run. Just hold on, think positive. This is a nice thought, but Stoics don't lie to themselves. They use a technique called premeditatio malorum, the premeditation of evils. Instead of just hoping for the best, you actively visualize the worst. Close your eyes. Imagine opening your portfolio tomorrow and seeing it down 50%, a catastrophic crash. Imagine the headlines. Imagine the panic on the news. Feel that initial shock. Now, open your eyes. Are you still alive? Yes? Do you still have your skills, your job, your ability to earn? Do you still have the capacity to reason? Yes? You have just realized that the worst-case scenario is survivable. By mentally rehearsing disaster, you strip it of its power to terrify you. When a real crash happens, and it will happen, you won't panic sell like the rest of the herd. You will have been there already in your mind. You will be prepared. Listen, the market does not care about your feelings. It is a cold, chaotic machine. If your peace of mind depends on green arrows, you will always be a slave to volatility. You will buy high out of FOMO and sell low out of terror, time and time again. Stoicism isn't about suppressing emotions. It's about building an internal citadel, a fortress of reason that external events cannot shake. It's knowing that while you cannot control the winds of the market, you are the absolute master of your own sails. Stop looking at charts to find peace. Look inward. Build your resilience. Focus on your process. Accept reality as it is, not as you wish it to be. That is the only way to achieve enduring financial peace. Class dismissed. Thanks for watching.